This video is about the connection or ratio that exists between gold and silver since we have known. Typically referred to as the gold to silver ratio, this video will examine the market conditions that may result in silver's underperformance in comparison to gold over the short term, and how you can benefit in the long term. Why don't you stay a bit while I tell you about their relationship and what appears to be a divorce in price. There have been many love stories told over time, but the love story between gold and silver is one that endures all imaginable tragedies, trauma, and heartbreak for more than 2,500 years, until recently. Like many failed relationships, everything started off perfectly as these two were inseparable as they moved completely in tandem for what seemed like forever. While they were very different metals with their own unique properties, uses, and even values, their moves were directly connected. So where did their relationship change? Why did it change? What does it mean for the future? And how should it influence your investment decisions? Hold tight. While it might sound weird in some ways, it's easier to use marriage as an analogy to discuss the synchronicity between gold and silver that has existed over time. So let's continue the story and see how this goes. Naturally, in the Earth's crust, they are 17 and a half to 1. But during Roman times, their relationship grew close to 12 to 1, where it stayed for hundreds of years. Like many relationships, gold and silver had lots of people trying to break them up. While their relationship continued, it had to weather the many attacks on them by wicked fiat printers. Eventually, those printers drove these two lovebirds apart, as they, silver in particular, became less and less monetized, to the point that during the 20th century, their ratio moved to 47 to 1. In the ultimate move to tear these two partners apart, the government intervened in 1971. Since that time, these two partners have never been able to regain their prior closeness, as their average closeness over the last 20 years has been around 65 to 1. While these two metals are connected, they no longer share a closeness they once had. This is the love story of silver and gold and their divorce. Someone said, "Can we please get back to talking about stacking?" Okay, let's talk about it. So this fictional love story of gold and silver may have been a stretch for some of you. I felt like it was a much better way to discuss the history without boring you to death, so hey, I tried. So if you're one of those that are sitting there right now wondering what's my point, well, let me get straight to it. As we prepare for this super commodity cycle, I'm not sure we really can trust or rely on the historical relationship between gold and silver, aka the gold to silver ratio. Meaning, I'm not convinced silver will move to the same degree as gold. History can be a wonderful teacher and can even help us predict the future, except for when the fundamentals have changed. In what way have fundamentals changed? Well, let's start with what I see as the top 5 reasons. 1. Gold and silver being removed from the monetary system in 1971. I won't bore you with that because I know you all know about that. So let's roll right into number 2. Silver's increasing use as an industrial metal and not a monetary metal. With approximately more than 70% of silver being used in industry, note that I'm not saying silver isn't money, but what I am saying is its industrial use being 70% would seem to be a greater driver of its price. As you can see in the diagram here, there's a breakdown of how gold is used and how silver is used. And you can see the industrial, jewelry, and investment uses. And we know that that is a part of what drives prices. I'll come back to this. Number 3, Basel 3, the treatment of gold as a tier 1 asset, meaning that it can be treated as cash on a bank's ledger. One could assume that over the long term, this may mean that some of the larger institutions need to have direct ownership of physical gold, which could create more demand and lead to higher prices. This is important because silver does not have that same kind of driving force behind it. Point 4, increased purchasing of gold by central banks over the last 10 years. And you can see the banks have steadily been increasing their holding, which is a part of what is going to ultimately drive the price of gold. And number 5, manipulation of silver and current economic conditions favor gold over silver. Now, it wouldn't be a list, I think, if we didn't talk about or at least mention manipulation. And while I didn't go into great detail over those 5 points because I want to keep this video short, I do want to get to the ultimate impact. The impact of all these attacks on what was once a highly correlated relationship between silver and gold has now become less reliable. Let me show you two charts on gold and silver prices to make my point. The first chart are the prices starting in 1915 to now. And as you see, the gold and silver moved almost in lockstep. You started to see some separation, but we'll get into that in greater detail in this next slide, which is from 1971 to current. And you can see that shortly after we were taken off of the gold standard, you started to see incredible differences where gold and silver didn't necessarily move one and one, that you started to see some separation. And if you look at the last 15 to 20 years on this chart on the far right, you can see why gold and silver still move in tandem. We are starting to see what was once highly correlated, meaning one moved with the other in the same direction or same amount, that separation has become larger. And you don't have to trust me. Let me give you the words of Lobo Tigre. Quote, the correlation between gold and silver prices since 1975 is 0.8876. And over the last 10 years, it's been 0.75. But over the last year, the correlation between gold and silver prices tanked to just 0.1979. Okay, that was a whole bunch of numbers, and I know not everyone loves math. In the nutshell, the closer that number is to 1, the more they move in lockstep. The further apart it is, the greater disparity you see between their movements. Rather than pontificate over the reasons why this change has occurred over the last 50 years or so, let me remind you of two timeless quotes when it comes to investing. One, the trend is your friend until the end. And two, don't fight the Fed. So by now, I'm sure you've had enough foam and now you really want the beer. Meaning, what's the bottom line when it comes to me stacking and making a profit? And how can this help you? One, as I shared, going forward, I don't think we can truly expect silver to rally or appreciate to the same level as gold, therefore bringing the gold-silver ratio back into balance. Here are some quotes here that I think will really drive this point home from other scholars and researchers. Two quotes in particular. The second one, which is, it is a possibility, but not a logical certainty, that silver price will rise in line with gold. However, when and if we experience an economic slowdown, silver prices might remain under pressure for some time to come. The next quote, if an economic slowdown occurs, silver prices will remain under pressure for the foreseeable future. The demand for computer hardware has been disappointing recently, and the outlook remains frail for the coming years. The second major takeaway, you often hear people talking about trading off of the gold-silver ratio, meaning when it gets to a certain high level, you should start investing in silver. And when that number comes down closer to 1, you should be investing in gold because of that ratio. I think you still can plan to trade off of the gold silver ratio. However, your target ratio may not be the 65 to 1, which has been kind of our historic norm. I think you might have to think about a higher number, more like 80 or 85 to 1, at least for the next 5 to 10 years. Third point, historically, the price ratio has been high during adversity such as wars, market crisis, and economic recession. Well, we currently are looking at this trifecta right now, which means that it will be more bullish for gold as people run to safe haven. Again, I don't mean to imply that silver will not do well. I just don't think that we can expect it to move on par with gold, and this is another one of those reasons. Number 4, silver moves at the end of bull market. Undoubtedly, someone out there is ready to shout now, but silver tends to, and I hear you. My only word of caution is to remind you that more than half of silver's usage comes from industrial use. And if the global economy remains slow, we have a recession that could mute some of silver's expected explosiveness. 5, industrial valuation. The most important conclusion I draw is that if silver truly shifts from a monetary metal to more of an industrial metal like palladium or platinum, that means we could see a complete breakdown where the industrial significance of silver leads to a complete reevaluation based on its limited supply and high industrial demand. This is important and leads me to the last point. Number 6, silver wins no matter what. So before you get mad and think that I'm saying silver is a bad investment, I'm not. What I am saying is I think we need to think about the time horizon in a different way. All of these things lead me to be more bullish on silver, but it does change my timeline. It leads me to believe that silver may not truly reach its deserved glory for another 5 to 10 years, because we'll need time to shake out the current market deceptions related to how readily available silver is, which I believe we have less available than people say. And we need time for that green movement to truly kick in and thrive with solar panels, electric vehicles. In my mind, best part of this potential time horizon is that it gives you even more time to stack silver for that glorious day. I find it interesting that a few weeks back, when gold was reaching its all-time high, silver still didn't even break $30. And so that's, again, just further highlights to me that those two metals aren't moving in the same way for a variety of reasons. Okay, I feel like that was a lot to digest. So I'm going to stop here and ask you to share your thoughts in the comment, as there's definitely a lot to cover from this particular topic. Do you think gold and silver will ever return to its historic norm? Which of the conclusions that I drew seems most logical to you? Don't forget to hit that like button. As you know, I need you to hit that like button. Every time you hit that like button, a rose gets new petals. Does that work? I don't know. Maybe I'm just talking to myself. Make sure you subscribe, join the community. We love having everyone here and commenting. Until then, always stack smarter and never stop learning.